All right. So under the short-term decision making, we just want to make a decision for maybe 3 months, 4 months. We just want to management wants to undertake a decision that is going to last for only maybe few weeks or days or something, and we cannot be relying on the long-term decision making appraisals like techniques like NPV, payback period, accounting rate. No, no, no. Those are for decisions that are going to be taken like maybe 3 years, 4 years, 5 years, and they are going to be involving a huge amount of money. Okay. But if you come to the short term, okay, you have received an order from a customer that is going to be, you are going to, like maybe you have been producing cakes and those things. So you have received an order from a customer that is going to be for 10 days. You are going to supply cakes for the person for 10 days. So how do you determine the price? Or how do you have to go and buy from somebody and give it to the person, or you have to produce it yourself? Okay. This is something that is going to last for maybe few days or weeks. Okay, it's not something that is going to be for years. Yeah. Uh, you have about 3 branches. One of them is not doing well. You are making a decision whether to close it down or whether to continue operating. And you also want to know maybe if you are starting business afresh, you want to know the quantity that you are going to be producing to have a zero profit or to cover your fixed cost. So under the short-term decision making, we have techniques like short-term decision making. We have techniques like, okay, short-term decision making. We have techniques like the relevant costing, which is one of the important techniques for FM and also MA in terms of determining your cash flow and other issues. So we have the relevant costing, we have make or buy. Okay, so make or buy decisions. Then we also have the shutdown decisions or close or keep. People call it drop or keep or close or maintain. So shutdown decision makings, shutdown decisions. Then we come to the limiting factor. Okay, you want to produce uh so many quantities, but you don't have what it takes. Maybe you need machine hours, but you don't have a lot of machines. So the production will be limited to the machine hours. So you have to use your machine hours available efficiently. So you have to now produce the quantity that is going to be maximizing your profit. That is a limiting factor. It is a very important area that they can examine, and also the relevant costing. Last thing was make or buy. You want to decide whether to produce the goods in-house or you want to go and buy it from somewhere. Okay. In terms of economic issues, the cost of producing in-house should be higher than the cost of buying. That is the only time that you can actually buy from outside. That is in terms of economic issues, money, in terms of money. Okay. If the cost of you uh cooking the house or cooking the rice in the house, okay, cooking the rice in the house is higher than you buying from outside, then you will actually opt for buying from outside. That is the make or buy situation. Shutdown, I've explained that already. Yes, you have a phone that is not doing very well again. So maybe you can decide to keep it, or you can also determine the importance of the phone and see whether you should keep it or you should just scrap the phone. Okay. So, and we also have the break-even analysis. So we'll be trying our best, but the focus will be on limiting factor and the relevant costing. So we have break-even analysis. We want to know a new firm. We want to know what is the number of quantity that we have to produce to get a zero profit. What is the number of quantity that we have to produce to cover our fixed cost? That is the break-even. At the break-even point, total revenue is equal to total cost. We are not making loss, and we are also not making what? Profits. Okay, so you have to know this so that you know the number of quantity that you'll be producing. And we have issues like margin of costing and those ones under here. So we'll be focusing more on the limiting factor and also the relevant costing, because that is the questions that we have for this. Okay, this is going to be for 20 good marks, and it will always be a calculation with a theory question or something like that. So you should be on the lookout for that. So relevant costing and limiting factor, you should master that. I'm not saying that those are the things that will come. Okay, but those are the common areas that they can give you questions from. Okay, you still have to focus on make or buy, shutdown decisions, break-even analysis, because we have done all of these things. Okay, so you still have to focus on that. Please, without talking plenty and much, let's solve the question number 1, which was a pre-mock question. So we don't have Senior Ben over here. Okay, since Senior Ben is not here, he might be in Morocco, journeying to Ghana by now. Yeah, Antiba, pick the question number 1 for us.
Question 1. Product Beta is currently produced and sold by Dela Limited. This year's results are expected to be as follows: sales revenue, materials, labor, variable overheads, fixed overheads, total cost, profit. The production director is considering the introduction of a new process which will result in a higher quality product which can be sold at a price of 20 Ghana cedis per unit. The changes in costs associated with the new process are as follows: material, an increase of 50% in the unit cost, labor, an increase of 20% in the unit cost, variable overheads, an increase of 25% in the unit cost. Fixed overheads will increase by 30,000 Ghana cedis. This is the rental cost for the new machinery acquired. The sales director is not certain that it will be possible to sell the whole of the production after it has been subjected to the new process. Required: You have been asked to prepare statement for the director showing the total profit for the forthcoming year, assuming the unit sales are constant and that 30% of the output can be put through the new process and sold. B. 50% of the output can be put through the new process and sold.
All right, thank you.
Sir, please, I'm done.
Yes, thank you. All right, so this is very interesting, very simple. Okay, very simple. So currently in our old system, how many units are we producing and how many units are we selling?
500,000. 50,000.
Okay, 50,000. All right, you see, even if you are not having a new system, you will still sell your 50,000 at the current price, isn't it? Okay. Even if you
Yeah.
are not having a new system, you will still sell your what? Your 50,000 at the current price. Okay. But what will happen is that some of the products will pass through the new system. Maybe it can be like right now, the packaging of those items are going to be good now. So the selling price will increase. Okay. It's only the selling price and then the material cost that will be increasing. Even if you are not going to be implementing a new system, you will still be selling the old 50,000, but that's just that it will still be at the what? At the current selling price. Okay. So this question is not anything. Okay. You can still repeat your current what statement of profit. Then you just add the additional contribution that the new system will be bringing. Okay. So if none of the products will pass through the new system, we will still be selling the products at the current price, which will be through the old system. We'll still be selling all the 100%. at the current price. Okay, now they are saying that 30% of the product can be put through the new process. You can just find the contribution for the 30%, the contribution that or the profit that the new system will be bringing on those items. So we are going to be doing it like I'll do it. We are going to be using two. So you pick the one that you like. Okay. So what will happen is that let's come here. Question number one. I have the La Limited. Okay. Okay. So let me have statement of profits or loss for the year. That will be the first project. 30% will be passing through the new system. Okay. So let's count to. So I'll be for decision-making processes. Let's have the old system here. And let's have the new system here. Then let's have the total. Okay. For decision-making processes, that will be better for us. Okay. I will take that explanation again. Okay. Currently you are, let's say you are doing printing. Okay, so you are going to be printing 10,000 flyers. Okay, let's say 10,000 flyers for your customer. That is the demand right now. So you are going to be printing 10,000 flyers. Okay, you are telling the person that, okay, if you should subject the 10,000 to a new process, or if you want to do some design or some customization on the paper, it is going to be increased. So the current selling price is 15 cedis. So it is going to be, you are going to be charging 20 cedis for that. Okay. Now, you are saying that, okay, only 30% of this will pass through the new system. Okay. So if 30% of this will pass through the new system, it means that you will still be selling 7,000 at the 15 cedi. Okay. But a new 3,000, which will be passing through the system, will now be sold at 20. Okay. The same way you can ask yourself that even if the new system is not successful, you still sell the 10,000 at what? At 15. Okay. So you can do it in two ways. You find a product that will not pass through the new system, they will still be sold at the current price, the existing price. The one that will pass through the new system will now be sold at the new price for the new system. Okay. You can also say, okay, even if the new system is not there, you can sell all the 10,000 at this price. Okay, let me now ask myself. So the one that will be passing through the system, what will be the additional revenue that will be generating? They will be generating the additional revenue of 5 cedi. So you can still do, okay, if the new system is not there, I will sell this. But if the new system is there, there will be additional sales. So how much will be the additional sales? That will be 5 cedis. So we'll be doing it. I'll do, if the new system is not there, this is the revenue. What is the additional sales that a new system will be bringing? We also do that. And we now come and do 70% for the old system, 30% for the new system. You have to be getting the same answer. So you have to choose the one that you are going to be presenting. Okay. So the old system, that will give us the revenue. Let's look at the revenue there. The question has given us the revenue already. So you can just reproduce whatever is here and move on. That will be for the old system. Okay. So we have sales revenue. So the sales revenue will be sales revenue for old. Okay, let me put the fee, this thing here. So this will be 50,000 units. Okay. 30% passing through the new system. What will be the quantity that will pass through the new system?
Repeat the question again.
They say only 30% will pass through the new system. So what will be 30% of the 50,000?
15,000. 15,000.
Okay, that will be 15,000. Please, at the end of the day, you are still going to be selling 50,000. Okay, your demand will still be 50,000, but some of these products are going to be passing through the new system, which will be 15,000. So the 35,000 will still be passing through the old system. Okay, so we are going to be doing one like that and one also like this. Okay, so let's come to the sales revenue for this. Sales revenue for the old system that has been given to you already. Sales revenue for the old system has been given to us already. How much is that?
750.
Okay,
750,000.
okay, 750,000. Okay, so 750,000. Okay, all right. What is the current selling price? What is the current selling price for the existing unit? What is the current selling price? Can you
15.
tell me that will be 50.
10.
Okay, it will be 750 divided by 50,000. That will give us the current selling price per unit. Are you okay? Okay, and that will be the current selling price per unit. Okay, so let me just see. Okay, let me use percentage. Let me use 100% over here, and additional revenue that will be coming from this particular place. So we have 30% of additional sales that will be coming there. Okay, now if the product is passing through the new system, what will be the selling price?
5.
Okay, it will be it is 20, isn't it?
Yes.
Yeah.
Okay, in the old system it is 15. In the new system now is how much? 20.
20.
It means that we are getting additional what?
5.
5 cedis. So what is the sales that the new product will bring? That will be 5 cedis. So 5 cedis multiplied by 15,000. What are we getting?
75,000.
Okay, we'll be getting 75,000. So what will be the total revenue? And what will be the total revenue?
825,000.
Okay, so 825,000. Okay, 825,000. Okay, let's come to our material cost. Okay, material cost is what? Under the, assuming the old system is not there, you'll be incurring the material cost of what?
$175,000.
Okay, 175,000. Okay, what is the additional material cost that we'll be incurring as a result of the new system? Let's go and calculate the current material price. What will be the current material price? Per unit.
3.5.
3.5.
Okay, they are saying that this will increase by what?
50%.
Okay, so what will be the additional material cost that will be incurred in the new system? Currently, it is 3.5. Now, this will increase by 50%. So what is the additional cost that will be coming from the new system in terms of material?
5.25.
That will be
5.25.
1 point.
5.25.
That will be the total, but the current one is 3.5. So what is the additional?
2.5.
That will be
2.25.
2 points.
25.
Okay, my distance is not here. So 0.5 multiplied by 175 divided by
175.
50, 3.5. Okay, 3.5 multiplied by 0.5. I'm getting 1.75.
Yes, 1.75.
Okay. Okay. So let me do. Okay. So 1.75. How many units is passing through the new system?
15,000.
15,000.
We are going to be incurring additional cost of what?
26,250.
Okay. So what will be the total material cost?
Oh, so I thought like you increase it by 50%. That is 1.5 multiplied by the 3.5. Or
And you are
you,
getting
you
what? What are you getting?
5.25.
5.25.
get
Okay.
5.5. Yes, please.
Okay. Without the new system, you still incur 3.75, isn't it?
Yes, please.
Okay. With the new system, it is now 5.25. So what is the additional cost from the new system? That is what we are looking for. So
Okay.
the new system will be bringing 1.75. Okay.
Oh, okay.
That is the cost that we are looking for right now. Okay.
Okay. Okay.
So we will do two. You pick the one that you like. Okay. So I'm having total material cost to be 200,000, 1,250. Is that correct?
Yes, correct.
Okay. Let's come to labor cost. What is the current labor cost? In total is what?
200,000.
200,000. So what is the labor cost per unit? Would that be 4? Okay. And
That's all.
okay, they're saying that that will increase by how much? The new system will increase that by how much?
20%.
Okay. So what will be the additional cost coming from the new system?
0.2.
0.8.
Okay, 0.3 multiplied by the number of units that will be passing there.
12,000.
Okay, so we have 12,000. So if we are selling through the new system, we are going to be incurring additional cost of 12,000. Would this be 212,000?
Yes, 212.
Variable overhead is what? What is the current variable overhead without the new system?
180,000.
180,000. Okay, what is the cost per unit?
3.6.
Okay, the 3.6, they are saying that it is increasing by how much?
5%.
Okay, so what will be the increment on that?
0.9.
Okay, so how many units is passing through the new system? 15,000. What will be the
15.
cost? What will be the cost from that?
13,500.
Okay, so what will be the total?
193,500.
Okay,
So,
193.
hello.
Yes, please.
Hello. Please, the material, is it not supposed to be 262, as if it's left with 10?
Are you sure?
Kindly check for me because I multiplied 1.75 times the 50,000. I'm getting a different figure.
We are not
And
taking all the 50,000 to the new system. Only
Multiply by 50.
30%. Only 30% will go there. That is 15,000.
thank you.
All right. You produce the 50,000. The people will still pay the 15 cedis per unit for it, but they have to pay additional 5 cedis for the product that will be passing to the new system. So what is the revenue that we are getting? What is the profit that we are getting from the additional 5 cedi? Additional 5 cedi there, we are going to be incurring costs, and that is the cost that we are doing under this one. What is the contribution? The existing contribution is what? And what will be the contribution from the new? The contribution from the old system is 195,000.
Yes, 195,000.
Okay. This one is what? 75,000.
23, 250.
23.
250.
Okay. Okay. We are having 23,
250.
250. Okay. So what will be the total contribution? Two one 8250. Okay. Let's come to our fixed cost. Okay. What is our existing fixed cost without the new system?
150,000.
150,000. What is the fixed cost that the new system will be bringing? They have given that to us.
30,000.
30,000. So we are going to get in a profit of 45,000 here. Okay. And we are going to be getting a loss of what? 6,750. So our total profit will be I'm getting 38,250. Okay. All right. So
Yes.
yes, that is I will do the alternative approach so that if you pick the one that you like. So alternative approach. So we have the alternative approach. Okay. But the alternative approach, what will happen is that your fixed cost cannot be shared among them. So we have to show the fixed cost as the total. Okay. So let's come here. The alternative approach, we are going to be having the old system. Okay. The new system. Then you have the total. Okay, you have to get the same answer. So it now means that 70% will be passed through the new system, isn't it? And 30%
Yeah.
will now be passed through this one. So all the 100%. Okay. So let's do the calculation for them. So the sales revenue for the old system will now be 70% of the output. Okay. So 70% of the output is equivalent to how many units? We are still producing the 50,000. Okay. But just that some of the products will now be taken through different production process now. So we have a sales revenue. Okay. 70% of 50,000 is what?
35,000.
Okay. And that 35,000 will be sold at a price of what?
15 cities.
Okay. So 35,000 units, 15,000 units. Okay. So 35,000 units, 15 units. Okay. So 15 cities multiplied by the 35,000. What are we having?
525,000.
Okay. So 525,000. Okay. 15,000 passing through the new system will be sold at what?
20.
Okay. If you sold as 20, I'm getting 300,000.
Yeah.
Okay. And that will give us 600 what? Or 825,000.
125,000.
Okay. Which is the same as the figure that you're getting there, isn't it? Let's come to material cost. Material cost. The cost per unit is 3.75, isn't it?
Yeah.
Okay. So 3.75, we are going to be producing 35,000 from the old system, and we are going to incur a cost of 35,000 multiplied by 3.75. I'm getting 131,250.
Mm-hmm.
Okay, 131,250. The 15,000, what will be the material cost for the new system now, which will be the 15,000? Would that be the 5.25?
Hello, sir.
Yes, please.
Please, I think the material is 3.5 rather.
3.5. Okay, okay. So,
3.5. You
so how
multiply
much
by
will be that? 3.5 multiplied by 35,000.
122,000. Yes, 122,500.
Okay. So 122,500. What will be the material cost for the new system? Would that be the 5.25? Material cost is increasing by 50%.
That one is 1.75.
No, we are taking only
Yeah,
70% to pass to them to be at the old system.
5.25.
Okay, multiply by 15,000.
78750.
Okay, total is what? Two zero.
20,150.
Okay, let's come to the labor. The labor cost for the 70%. How much are we going to be getting?
Sir, please, how did you get the 5.25?
Oh, they said that the new system, the material cost will increase by 50%.
So that will be
Okay, sir.
3.5 multiplied.
Thank you.
Oh. Labor cost is what? What is the labor cost per unit? Was that 4?
Yeah, that was 4. Yes, 4.
So the 4, we are going to be incurring 4 on how many units? 35,000, isn't it?
5,000.
So 4 multiplied by
So
35,000.
140,000.
Okay, 140,000. What will be the labor cost for the new system now?
4.8.
4.8. Okay, for how many products? For how many units?
15,000. That will be 50,000.
Okay, so multiply by 15,000. 72,000. Okay, so that will be 72,000. What will be the total?
212,000.
Okay, 212,000. Okay, then we come to variable overhead. Variable overhead. What are we having? What is the cost per unit?
3.6.
Okay, multiply by 35,000.
126,000.
Okay, that will give us, is it 3? The variable overhead per is how much?
3.6.
Okay,
3.6.
for the old system.
126,000.
Okay. Okay, 126 what? 26,000. What will be the variable cost for the new system?
4.5.
4.5. Okay, multiply by 15,000.
67,500.
67.
500.
Okay. 67,500. What will be the total cost?
193,500.
193,500. Okay. So let's come to our contribution. Getting 136,500 for the 136,500 for this one. Okay. And the new one is what? I'm having 81,750. Okay, 81,750. So we have 81,750. So let's put the two together. 136,500. I'm having 218,250. Okay, 218,250. Let's count to the fixed cost. Okay, you see the fixed cost over here. You cannot what? You cannot share the fixed cost for this particular one. You cannot share the fixed cost. So what will happen is that the fixed cost is fixed. So we still have the fixed cost of the 150,000 for this one. Okay, and we bring in the fixed cost of
30,000.
30,000 here,
30,000.
and this will give us 180.
180.
Okay, so this one you'll be having a loss and you'll be having a profit here. It doesn't mean that the new system is giving you a profit. No. Okay, you can see that 15,000 of the old system has been shifted to that. So our old system, our profit is 45,000. So it is a new system that is bringing the loss. But what is happening over here is that even if you produce one unit under the old system, you still be incurring a fixed cost of 150,000. But 15,000 of the old unit, which is 15,300, has been shifted to the new system. But I'm just using alternative approach. Okay. So this will be profit will be what? Profit under the first one is what?
So the first one will negative 13,500.
So 13,500. And this will give us
1,750.
Okay. So the net effect will now be what?
38,250.
38250. Okay. If they ask you that you should advise them whether they should implement the new system for 30%, would that be are you going to be advising them to implement that? Please forget about other factors. You are going to be using what you have done. Will you advise them that they should go ahead with that?
No.
Okay. Why? Because the new system will be bringing what? A loss of what? 6750. That is going to be our current system
Reduce
is
that.
45,000. Now we are having a total profit of 38,150. It means that the new system is coming to reduce that. So this is for the new you can use any of the two. Okay, you'll be getting the same answer. Let's come to the 50%. So if they are now producing 50% through that process, so I'll use only one since you are now familiar with the two, okay, you pick the one that you want. So
So, so in the examination, can you do any of them, or you have to also do the second application?
oh, so yeah, you want to present one question, you want to answer one question with two, no, you don't have time. So what the way you understand the question, you just present your own like that. The examiner will be giving the alternative approach to those who use this one. If you use the two, you just get one answer because they cannot give you 10 marks for the question is 10 marks. Okay, now you have done two, they have to give you 20 marks. No, it means that you have wasted your time for the other one. Just pick any of them. You just do any of this one. But because we are learning, you don't know which of them that you go by. That's why me, I'm giving you the alternative way of presenting it than the first one over here. Okay, so you pick the one that you like. Let's come to statement of profit of the new system if we have 50% going through. So statement of profit or loss. Okay, if we have 30%, 50% going through. Okay, so let's have that will still show the old system here. Okay, so old system will still produce 100%. Okay, so we now come to the new system. And the new system will show the incremental revenue of the 50% that will be passing through. Then we come to the total. The total will still be 100%, but just that the selling price and the material cost of some of them will be increasing. That is the 50% that we are having over here. So it's not that you have to produce more than 50,000. You will still produce your 50,000, but just that the products are going to be passing through a different system and they are going to be having a different selling price. So we are just looking for the one that will pass through this particular process. So let's come to our, okay. So this one, we can still produce our old results, which is a sales revenue. Okay, sales revenue. The old one is what? 750,000. 750,000. Okay. Okay. For the new system, how many units will now be passing through out of the 50,000? How many units will be passing through that and will be generating additional revenue? How many units?
25,000.
25,000. And this will be bringing additional revenue of what?
Five.
Okay, so what will be the total? 125,000. I'm having 125,000. Okay. The total is what?
Yes, 125,000.
Okay. Total is what? 875. Okay. Let's come to material cost. Material cost now is under the old system, material cost is 175,000. Okay. What is the additional material price additional cost that we are going to be incurring under the new system? Would that be 1.75?
Yes, 1.75.
Multiplied by 25,000, isn't it? So we have 743750. What are we having as a total? I'm having 218750. What will be the labor cost under the current? Labor cost is 200,000. Okay, 200,000. What will be the additional labor cost? 20% of the current. So 0.2 multiplied by the 4. I'm having 0.8. Okay. I'm having 0.8 multiplied by 25,000. So we'll be having 20,000. That will be the additional. So this will be 220,000.
20,000.
Okay, let's come to the variable overhead. Okay, the variable overhead, assuming there is no system, this will be at 180,000. We have 180,000. Okay, so the new system will be bringing additional variable cost of what? How much is 0.9
Yeah, 0.9.
multiplied by 25,000? I'm having 2 to 500. What will be
5,500.
the total? Total, I'm having 202 to 500. Okay. What will be our contribution under this one? You can just go and copy the 195,000. So 195,000. What will be the contribution under?
It's
38,750.
Okay, 3750. So what will be the total contribution? Two, three, 750. So our fixed cost is 150, and this will be 30,000 additional fixed cost. So this will be 180,000. So we have 45,000 as profit, and we have 8750 as profit, and we'll be having 53,750 as a total profit. If 50% is the profit. Okay. So would if 50% is being passed through the new system, would that be profitable to the entity?
Yes.
Okay.
Yes.
So maybe they can ask you to choose the option, or you can advise them. So the advice is that the more the new system is implemented, the more the profit that they'll be getting. So you can also do the alternative one. You should be getting the same answer. You can also do this one. You should be getting the same answer. This is what I was asking you to do. Okay. So it's actually not a big deal. All right. Question number 2.
Hello, so Linus.
Yes, please.
Please, so can you kindly take me through how you got the labor for the new system?
Disconnected.
Do you have any assistant here? Sinaripo, can you help us go to, or is not there? Yes, Sinaripo is not there. Who is there? Yeah, someone should help our dear sister with the labor cost for the new system.
Is it the one we just did?
No, assuming any of them.
Yes,
So
yes,
just
this is the
explain.
one we did.
Just
Okay,
explain.
so with that one, we found the labor cost per unit. That was the 200,000 divided by the 50,000. We had 4. So, and the person says is increasing by 20%. When we increased to 20%, we had 4.8. With the increase, which is 4.8 minus 4, 0.8. And multiplied by the new quantity, which is 25, and we have 20,000.
Okay.
Yeah, Ma, is the walkthrough successful?
Yes, thank you.
Okay, all right, you're welcome. Okay. Yes, Auntie Barry there.
Yeah.
Okay. Question number 2.
Question 2. Dela Limited produces two critical components, K and T, both of which are used in petroleum refinery. The components are made by passing each one through two fully automatic computer-controlled machine lines A and B with respective maximum capacity of 13,600 hours and 15,360 hours. The following details are available. 1. Due to production constraints, the company has decided to produce only one of the two components, K or T, for the next period, but not both. 2. Market demand is limited to 59,200 units of K and 80,000 units of T. Product unit data, selling price, machine time, raw material X. Sir, please scroll. So, the maximum quantity of material X available is 136,000 kg. The material is purchased at $50 per kg. Variable machine overhead for machine line A and line B is estimated at $500 and $600 per machine hour respectively. The company operates in just-in-time system. Required: calculate which of the components K or T should be produced and sold in the year in order to maximize profit. You should state the number of units to be produced and sold and the resulting contribution. B. Dela Limited wishes to consider additional sales outlets which could earn contribution at a rate of $400 or $600 per machine for the machine line A and B respectively. Such additional sales outlets would be taken up only to utilize any surplus hours not required for the production of the components. Calculate whether Dela Limited should now produce either components K or T, and what quantity to produce and the resulting contribution. C. Suggest ways in which the company may overcome the capacity constraints which limit the opportunity available to it in the year, and indicate type of cost which may be incurred in overcoming each constraint. I'm done, sir.
Okay. So very, very simple, very simple. Very cool. This question was very simple. Okay. So this one we can't use what? We can't use limiting factor approach, isn't it? Limiting factor approach is used when you are going to be producing all the what? All the products. Okay. So if you are going to be producing all the products, the question now is which product will you produce first? Which product will you produce second? That is for the limiting factor. But this one they say that you can only produce only one of them. You can only produce one of them. So that is the case now. So let's look at the requirements so that calculate which of the components K or T should be produced and sold in the year in order to maximize what profits. You should state the number of units to be produced and sold and the resulting what contribution. Very simple. Okay, let's come here. All right. Products, we have the K and T. The market demand is 5,900 and 8,000. Okay. We will actually look at that, but let's come here. Okay. All right. What is the selling price for each of these products?